Hi friends, what will happen to mortgage interest rates after two banks collapsed? As we all know, this last weekend, First Silicon Bank and Signature Bank both collapsed and the Fed immediately took them over. Why? First, it's important to understand that they have their investments in long-term assets. Long-term assets such as mortgage loans at around 3 or 4% rate. But as we all know, interest rates have gone up about 4% since then. So those assets are worth a lot less in today's market. If they needed access to capital, they would have to turn around and sell those assets at a loss or raise additional capital elsewhere. Unfortunately, a large amount of account holders this last Friday were requesting all their funds at once. When that happened, the banks didn't have the funds to pay them and therefore collapsed, and the Fed immediately took them over. Is this the case for most banks? Not necessarily. Most banks invest in short term assets, such as business loans and auto loans and things of that nature. This way, if one industry were to fail, they're invested in multiple industries and therefore they hedge their risk. They also have access to short term capital in the event that cash is needed immediately because they're invested in short term assets. So, what happens from here? Well, the Fed was hawkish, meaning they were trying to raise rates quickly, harder, and faster based on what they said in their last meeting. However, after this weekend's events, they're going to have to rethink that. So, what's happening now? Well, interest rates got better by 100 basis points today. What can we expect going forward? Interest rates will most likely go down going into the summer and stay down for a longer period of time. This also means that more home buyers will hit the streets, and we have a low supply of homes. Back in January of 2012, 2.4 million homes were on the market. Why does this matter? Well, that was the last market bottom, and the year after that, we went up 8% in appreciation. Today, we only have less than a million homes for sale, and only 557,000 are actually available, while the rest are under contract. So, you're going to see lower interest rates, a larger amount of home buyers, a low supply, and this is all great news for the mortgage industry. If you have any questions, please feel free to reach out to me. I'm happy to answer them. Write them in the comments section below, and I will speak to you soon. Have a wonderful day, and if you like this video, make sure you click that like button. Bye, guys.